So now for the tricky part. How the hell do I get to bed? How do I wind all this together under the headline of the Kobayashi test? It was like last night on repeat. The Fed trapped by American growth, a high policy rate, much higher than the rest of the world. The capital, the world's private and sovereign capital, flooding into American capital markets. Asset prices, what did Paul Tudor Jones say? Melting up higher and higher. And the rest of the world pleading for the Fed to relent and cut rates. But a world where America has become the locomotive of economic growth and does not need to reduce interest rates, owing to the much mentioned fiscal policy being very, very loose, the capital flows into America, and the AI revolution. And in practical terms, Bank of Japan is a great representation of this. Currencies move 40%. I cannot stress that is such an enormous number. The devaluation of the Asian tiger economies. Shut up! Bloody shut up! Frog, shut up! Oh my God, it's not listening. Yes, I was having a conversation with a tropical frog. Japan, what's I saying about Japan? Yeah, 40% devaluation. And it's like, yeah, we're going to raise interest rates. We're going to raise it. So the Fed goes from nothing to 5.5. Japan's like, yeah, we can do that. And they can't. They cannot. Japan is trapped like the Bank of England. If you remember, in 1992, they jacked rates all the way to 12%, trying to take on the Treasury Secretary, Scott Bessent, and Stan the Legend and Soros. We're at 12 and we're going to go to 13, going to go to 14, going to go to 15%, the Bank of England claimed, or its political masters, Norman Lamont claimed. And the wisest guys in the room like shrugged their shoulders and said, don't believe you. We don't think you're going to go the euthanasia route. And that's Japan. Debt servicing and repayment of existing outstanding JGB stock is a third of total expenditure already at zero rates for the Japanese government. So imagine the Bank of Japan at 5.5% Fed fund equivalent rates. Ain't gonna happen. The whole house of cards comes stumbling down. And so it's like, I said the Bank of England in 1992. I could have said the Bank of England. Under Norman, what was his name? The Bank of England governor in the 1920s, persuading Benjamin Strong to cut rates. It's Benjamin Strong. Trump wants to be strong. Being persuaded, hey, if you can lower your interest rates, then that makes it a lot easier for us to resist higher rates. And that's going to be a good thing for the family, the global family. But here's the rationale, I think, from people like Steve, from the Brain Trust within the Trump team. Like I said yesterday, the best part of 300 billion US dollars has already left the banking systems of emerging market countries and gone into America, into dollar stablecoins. Standard Charter were saying the next 3 years, another $1 trillion is likely. That is capital flow. That's the kind of high-powered money, the equivalent of gold flowing into the US in the 1920s. The flow that underwrites private banks and encourages them to underwrite more credit growth. And more credit growth gives you more economic growth. That is, the gold flow is the dollar collateral. We're on a dollar collateral, treasury collateral system today, not the dollar standard. The dollar, not the gold standard, the dollar collateral system rules today. Treasury collateral being borrowed offshore, hypothecated, rehypothecated, dollars being created, credit being created. The Greece to further economic growth and almost certainly higher melt-up like asset prices. Benjamin Strong's Fed immunized those gold flows in the 1920s. They short-circuited the credit mechanism. And that was a fix for the domestic economy, because the domestic economy was really, really strong, obviously. And the Feds didn't want the banks multiplying that pressure more via lending. Oh my God, these frogs are so loud. With more domestic lending. But in immunizing, they broke the global trade system. The whole idea was that the American economy should have grown even stronger and sucked in imports and let capital be retained in the rest of the world to service growing economies in Europe. Immunization stopped that. The Chinese have done the same thing with their mercantilism. They have an immunization, which is the dollars from the export flows are they're never put into yuan. They're kept in dollars and held. They were held in dollar risk assets. Now they're being held in dollar collateral via very, very poor African and emerging economies with large commodity resources. I've discussed that before. I'll put you in the direction of some of my papers. So Trump, he doesn't want to break the system. He just wants a better system. He doesn't want immunization. And so I think the deal, and there's been a deal, the deal with Japan. So Japan, why Japan? It's the largest holder of treasury bonds. The sovereign is probably part of the American-Japan alliance. There's a lot of things we don't know. But it's no longer needed, that agreement, because the stable coins are doing the heavy lifting. You know, the Genius Act. The fact that $1 trillion is likely to come in from emerging markets and then from other parts of the world. That is high-powered money coming in rapidly into the American economy. It does not need the Japanese holding treasury bonds. Now, we all know that their debt is 2.6 times GDP or so, but less noted is the gigantic foreign reserve assets. So Trump, I'm making this up, but Trump says to Japan, to the new lady running it, he's like, honey, I don't need you buying my treasuries because I'm over here stateside and I'm about to suck down on $1 trillion out of emerging market banking systems. No, I want you to take Japan's sovereign balance sheet and not own treasuries. But I want to push you along the risk frontier. I want to move the aligned countries. I want you taking more risk. All I want from you is that you take equity stakes, that you don't buy treasury cash bills. I want you to help invest in how I bring manufacturing onshore. And you know what? If you do that, I'm the best friend you ever had. And I'm kind of going to look the other way as your currency slides, as your exports boom, and as your share prices take off once more. In fact, I welcome it. Let's face it, there's no other way you're going to get growth. And listen, the more cantankerous I am, the more I get to press and implement my controversial trade and economic agenda, it's possible my economy weakens. And I'll get rates back down to zero. And so I'll give you this. I am kind of your savior, but you got to finance me big with equity. And you know what? We'll have a sovereign joint wealth fund. It's going to be fun. It would be fantastic for your corporate profits. That's what the Nikkei smells. And then Trump probably goes on, is like, and you're my flank against the Chinese. Chinese are the enemy. They ain't getting this deal. Only friends and family get this deal. We're going to keep that red cabbage tight with the dollar. They're not allowed to devalue it. And their face says they can't do it anyway. But we certainly will not permit them to do it. So I want Japan and Korea to gain super currency competitiveness against the might of the Chinese mercantilist.